Good morning. I'm Brian Curtis.
And I'm Doug Krisner. Here are the stories we're following today.
Well, a new medical emergency for the British monarchy. Let's get to Dan Schwartzman in New York with more. Dan.
Hey, Brian. Buckingham Palace says that King Charles is being treated for an unspecified form of cancer and will be stepping back from public duties. The cancer was discovered late in January while the 75-year-old was in the hospital being treated for an enlarged prostate. The palace only has said that the cancer is not related to that prostate condition. President Biden has expressed his concern and says he will reach out to the king, whom he met back in July. Charles has only been king since September after the death of his mother, Queen Elizabeth. Northern California is trying to dig out from the storms. Southern California is still under emergency warnings. Bloomberg's Ed Baxter reports from San Francisco.
4 days of the atmospheric river weather conditions, with the worst coming over the weekend. Some Bay Area peaks got 100-mile-per-hour winds, not that high for most of us. And the power outages were widespread. At one point, as much as half of Silicon Valley customers lost power. At our home, 18 hours without power. Things have eased now, hopefully, although tragically, 2 people did die from falling trees. The focus now has gone to Southern California, where there is flooding and power outages, as well as landslides in the Hollywood Hills and Santa Monica Mountains. There are still evacuation orders in place, and several rescues have had to happen. In San Francisco, I'm Ed Baxter, Bloomberg Radio.
Thanks, Ed. Secretary of State Antony Blinken has kicked off his 5th visit to the Middle East since Hamas's attack of Israel back in October, and he started it with a meeting with Saudi Arabia's Crown Prince Mohammed bin Salman. Blinken will visit Egypt, Qatar, and Israel also on this latest trip. Meanwhile, ceasefire talks continue with the U.S., Qatar, and Egypt drawing up a proposal that would see a stop in hostilities for several weeks with a phased release of remaining hostages. Both House Republican leaders and GOP presidential frontrunner Donald Trump have rejected a bipartisan Senate deal to impose new border restrictions while tying in billions of dollars of aid to Ukraine. Speaker Mike Johnson has called the deal, quote, dead on arrival and a waste of time. Both Senate leaders Chuck Schumer and Mitch McConnell back the bill, which allows the Department of Homeland Security to start turning away asylum seekers whenever encounters reach 4,000 daily for a week. The bill would also toughen qualifications to seek asylum in the country. Johnson and other Republicans are pushing for much stricter immigration policies in exchange to unlock tens of billions of dollars of aid to Ukraine. The Wall Street Journal reports that Republican presidential candidate Nikki Haley has requested Secret Service protection after receiving threats. Haley's campaign has not detailed what threats led to the request. The Secretary of Homeland Security has the authority to grant a protective detail after consulting with a Congressional Advisory Committee. Haley has previously talked about a swatting episode that occurred back in December that sent law enforcement to her South Carolina home. The former governor, though, was not home at the time. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg. Brian.
Dan, thanks very much. 6 minutes past the hour. It's time now for the top business stories of the hour. China is said to be tightening trading restrictions on domestic institutional investors and some offshore units. Bloomberg's Yvonne Mann has more on the story from Hong Kong.
We hear Chinese officials have imposed caps on some brokerages' cross-border total return swaps with clients. This is a channel that can be used by Chinese investors to short Hong Kong stocks. At the same time, Chinese brokers who use the channel to buy mainland shares for their offshore units were told not to reduce their positions. Also, we hear some hedge funds have been banned from placing sell orders completely, and still others have been barred from cutting stock positions in leveraged funds. Economists say this could provide some short-term relief, but may be counterproductive as investors worry about their ability to exit the market. In Hong Kong, I'm Yvonne Mann, Bloomberg Radio.
Well, here in the States, we mentioned a moment ago how strong the economic news of the day was. U.S. services expanding by the most in 4 months during the month of January. Now, that follows last Friday's surprisingly strong jobs report. Both of these data points kind of spoil the notion of a Fed rate cut in March. We heard today from the head of the Chicago Fed, Austin Goolsbee. He was saying it's important to consider all aspects of the data.
We just got to be mindful in seeing these big, strong jobs numbers and big GDP numbers that they do not have to mean overheating in the traditional sense if the supply side is moving around.
That is Austin Goolsbee, the head of the Chicago Fed. He went on to say that he will not commit to any specific decision on rate policy before the Fed's March meeting. Brian?
Well, U.S. and Chinese officials are set to meet in Beijing for another round of talks on economic issues. That's coming up this week. We hear a 5-person delegation from the U.S. Treasury will meet with Chinese counterparts. The discussions mark another round of the Economic Working Group that was established last year. The talks will cover topics including the macroeconomic outlook, the two countries' investment screening regimes, and coordination on debt and climate change. Let's get to our guest now in the studios with us live. It's Eric Ju, a Bloomberg economist covering China and Hong Kong. Eric, thanks very much for sneaking into our studios here with us this morning. So, look, I mean, we all know that the stock market is not the best barometer for judging what's happening with the Chinese economy, but it is still a useful indicator. Small cap stocks hit very hard. The CSI 1000 index is down 27% for the year. Now, that's an extraordinary number. The benchmark is only down 3%, and we all know that the benchmark itself has been down, but we're thinking that perhaps if you don't have support from the so-called national team, then you're hit even harder, like we see with that 27% figure. And what does that tell us about the economy?
Yeah, I think you're partly right that stock market is not the best parameter to see what's going on in China. But I think at least it's a good barometer of what's the sentiment, especially onshore China. I think there used to be a joke, saying the only two things which is still telling the truth in China is stock market and football. China's soccer team, right? So you see, we mean it's kind of real time, monitor of the sentiment in China, and I think that the tumble is very much telling the truth that actually investors are increasingly being disappointed on how the government is responding to the economy, to the confidence, and the national team is probably giving some hands, but we don't see that's a long-term solution. It's probably helping to stabilize a bit in short term, but they're not going to last long, right? As we have seen last week. So after Premier Li Qiang said something about stabilizing the market, we see a few days of stabilization, but it quickly renew the tumble again. So I think such measures, the national team, it's not really addressing the fundamental underlying issue why it's causing the low sentiment in China. And unless the government is really doing something to addressing those issues, I don't think we're going to see a sustainable rebound in the stock market.
It's very interesting you make that point. I was looking at a piece citing Goldman Sachs data. Actually, the firm estimates the amount of stock buying that we have seen on the part of the national team at about 70 billion yuan. That would work out to be maybe just under 10 billion US over the last month. But Goldman is going on to say that we're only about a third of the way there, that you need a total of about 200 billion yuan in buying just to stabilize the market. I mean, and I'm wondering about the message that type of aggressive buying would send.
Yeah, as I said, I don't think that's a long-term solution, right? You can buy today, you can buy tomorrow, you can buy next week, but you cannot buy forever, right? So
let me counter that, though, with your own team at Bloomberg Economics says that economic activity is actually accelerating a little bit in January. It's a rebound in production and construction, and you're citing high-frequency indicator indexes, and that it's not quite at the pre-pandemic levels, but it is rising. And you say that the Bloomberg Nowcast points to GDP expanding 5.5% year on year, annualized in the first quarter. Now, that's up from 5.2% growth. But is it just too short a time for that to actually filter through to sentiment?
Yeah, and also bear in mind, so we need to read this data with caution because it could be that, factories are just rushing before Chinese New Year holiday in early February. So they just get things done before the holiday. So we do expect you're going to see more weakness in February, and that's natural because a long disruptions from the holidays. So I think a better gauge is we have to combine the first 2 months. Probably we get more hard data in March. That will give us a better picture. But for now, some pickup in January, but I think it's too early to be cheerful.
We had a guest on the program yesterday saying when I asked a question about trying to turn around sentiment, the answer was very blunt. I mean, you deregulate the economy. Is there, do you think, on the part of government officials, an experiment happening, a thought experiment on ways to change regulation as a way of fundamentally shifting sentiment?
Well, I think that's an expectation by the markets or by some investors, but we are not sure if that's what the government is thinking, because the government is thinking, if you recall, President Xi last week talked about the high-quality growth, those stuff. So what's in his definition? What's a high-quality growth? Probably he's more focusing on national security, toughening some regulation even in those financial sectors, so trying to make it more equal among society. So I think our expectation is probably different from what Xi or what the top officials vision for China. So that's a key, I think, the key uncertainty right now at the moment.
Is President Xi channeling his inner Mao?
I don't know, because obviously he has a big ambition, right? Trying to be, if not the most.
I ask that because it's really the essence of that is ideological trumping practical.
Yeah, I think it's you're true. It's he's more talking about ideological, but for many Chinese, I think they're increasingly frustrated because it's for ordinary people. For some people, it's just looks like you're calling black white, right? So you're not really telling the truth. Let's just be honest. What's going on in the country? Let's everybody from top government to the bottom, everybody just being honest. What's the problem we're facing now? So you don't have to. We don't buy your ideology, those stuff. It's just calling black white, right? When we don't know. Yeah.
So, Eric, you referenced the Lunar New Year holiday. Do you have expectations about how well Chinese consumers will hold up during this period? I mean, are there pretty high expectations that there's going to be a fair amount of spending?
I think the issue on that, too, if I could just put something on the back of Doug's question, is that, normally you see a little bit of a slowdown during the Chinese New Year because the factories shut down, people go home. But I understand that Chinese leaders, that they recently, the Ministry of Industry and Information Technology gathered provincial leaders and said, let's not shut down as many factories. Let's get the factories running because we need this for the country. Is this a sort of new line?
Yeah, but it's hard to run those factories in Chinese New Year holiday, right? I guess this year we are going to see a very substantial travel across the country because it's probably the first year, people can totally freely travel, during the Chinese New Year period. Last year it was reopened, but still many people got sick because of the COVID. So I think this year we're going to see a big traveling across country. But on the consumption side, we don't expect a very strong number this year. So as we have seen in past holidays, people are traveling, but they're not really spending so much money, right? So because the income got hit, their jobs got hit. So everybody just keeping the minimum spending. But of course they want some home gatherings, so want to see their parents for so many years. So I think we're going to see lots of travel. So probably those travel related, some tourism related business are going to see some boost during the holiday. But I think overall goods consumption probably won't be so strong.
We talk a lot about kind of deflationary forces at work in the economy. So at the retail level, I mean, are people going to be dealing with much lower prices as they consume?
I think I read something, even the pork prices haven't increased a lot this year before the Chinese New Year. So that's another, bad sign, not a good sign of the deflation part. I think but it's just demand and not there. It's cheap, but even it's cheap, probably people don't have that so much money to spend like before. I think that's the issue.
Let's go back to the slightly more optimistic read that I mentioned from Bloomberg Economics. You say we'll have to get really 2 full months in to be able to gauge that. But let's say that things are actually improving a little bit through here. What would be feeding that? What's driving the pickup? We mentioned production and construction, but can that continue?
I think it's more the strength. I think in the past couple of months we have seen quite strong reading on the construction PMI. So that's probably suggesting some fiscal stimulus was feeding into some construction part. But it's mostly still infrastructure investment. That's a traditional way the government is trying to boost the economy. Of course, the efficiency is probably decreasing, but it still can have some impact on the economy. At least I think in the first quarter, because they front-load some fiscal stimulus in the end of last year.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street.
Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast.
You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, SiriusXM, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis.
And I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.